Hey y'all, Seth Bradley here. Thank you so much for tuning in and spending your valuable time learning with us. Absolutely appreciate each and every one of you. I've got a small ask. If you'd please just take a few seconds and leave us a rating and review on Apple Podcasts or wherever you're listening from, it goes a long way in landing the best new guests for our show. That's it. Thanks again. Let's go.
This is the Passive Income Attorney Podcast, where you'll discover the secrets and strategies of the ultra wealthy on how they build streams of passive income to give them the freedom we all want. Attorney Seth Bradley will help you end the cycle of trading your time for money so you can make money while you sleep. Start living the good life on your own terms. Now, here's your host, Seth Bradley.
Law Nation, welcome to the newest episode of the Passive Income Attorney Podcast. Thank you so much for tuning in today and spending some of your extremely valuable time with us to learn and grow. You don't want to miss this episode. We welcome JR Gondeck, the partner and managing director with the Lerner Group. He works with families to promote intentional communication and drive collaboration between all generations. He leads investment research and is responsible for shaping strategic policy. To put it quite simply, JR takes an extremely unique approach to looking at finances by involving your family, by talking to your kids and talking to your significant other openly and transparently about what's going on with your financials and your life in general, which is an incredible tool because a lot of times we're afraid to talk about money. So without further ado, let's get into it. JR, what's going on, brother? Welcome to the show.
Thanks for having me.
Absolutely, man. Thanks so much for coming on. Well, look, let's just dive right in, man. Tell us a little bit about your background and your story.
I grew up in northern Wisconsin, long time, very small town, continued south, studied undergraduate finance, and ended up in Chicago for 20 years, building up kind of a business. Kind of grew up in the business on the investing side, picking stocks and such. And today we've evolved to kind of the way the industry's going in a lot of ways, and more planning based overall. And got a team of 21 today. We manage about $2.5 billion.
Gotcha. So dive in a little bit more. What is it about what's the difference between that traditional way and the new way? Describe both of those and how you've kind of evolved.
Well, I think when you go back to the movies, watching Wall Street movies, you kind of have selling an individual stock, very transaction based, trying to make a lot of money. I mean, it was very kind of male to male dominated business, whether it's the advisor and kind of the patriarch of the family and such. And that's kind of how I started in the business, learning that way. And then as you evolve and you see families evolve over time, and you can kind of see a better way. A lot of estate plans were in order, but there just wasn't any communication. And the money was made, but it wasn't transferred. The legacy wasn't transferred. There just wasn't a lot of family communication, and really saw the need to evolve to where the industry's going. And today my team is very diversified, over half women and half men. And it really helps to balance off conversations because men and women think differently, clearly. And you really need to listen, whether it's your business, whether it's planning, whether it's your family, to all points of view, and you end up with better results, we find.
Yeah, that makes a lot of sense. So it's almost like a family approach, right?
100%.
Yeah. So maybe dive into that a little bit deeper. I'm not sure I fully understand it either. So, what continues to, separate you from, the traditional types of folks like, let's say, Northwestern Mutual or Charles Schwab or somebody like that? What makes you guys different?
Well, I think a lot of it comes down to focus on the entire family. I mean, and including both parties, and simplifying things. Mm-hmm. It's too many times. Some people are super interested in investments, but not the whole family. And a lot of what we found is it tends to go over a lot of people's heads, or they're not interested, or they check out. And it's really, our approach has been to really simplify, whether it's your estate plan, whether it's your financial plan, whether it's the investment plan. And one simple thing we like is a one-page net worth statement. Include everything you have, your insurance, your investments, how they're titled. And it really helps to bring things down, and then focus on the planning, overall and such. And then I think a lot of families tend to focus on understanding what their parents or grandparents have in place. But our approach is to really compare to the next generation and complete the entire family process. So you're comparing either up a generation or down a generation, and it just helps coordinate, and money isn't lost in translation that way.
Yeah, that makes a lot of sense. I mean, keeping it simple, right? Because you're right. Some people within a family structure might be interested in it. Some folks aren't, or one person in the couple will be like, oh, that person's the finance person, I'm not. And but they need to know too. They need to at least have some transparency and understand what's going on. And I think the way that you do it by breaking it down and keeping it really simple is the way to keep those folks and that half involved.
Yeah, it tends to be divide and conquer type of mentality with a lot of families. And it is we could always get into the weeds of the details, but it tends to be that the bigger picture you can stay, the more people in the family feel included, and the more comfortable everybody is talking things through, and you end up with better results.
Yeah, and I think if you keep it simple, it makes it more interesting too, especially for somebody that doesn't want to dive into the weeds. But if they see something really simple and they're like, "Oh, look at this, net worth statement," something like that, it almost gamifies it a little bit and makes it a little bit more interesting.
Absolutely. I mean, everybody's used to seeing a book like this, whether it's your estate plan, your financial plan. No, we like to have 2, 3, 4 sheets. That's it, and
Yeah.
summarize.
Yeah, and it's crazy how many people don't even know, what their net worth is, or they don't track it, or they don't track their income and their expenses. They have no idea. It's just, money coming in and money going out, and you have no idea what you have. So it's really hard to do any meaningful financial planning if you don't know where you're at and where you stand.
100%. We talk about the wealth return. A lot of people are focused on how much they have in their bank account, their 401k, and their investment accounts. Right. And you don't look at your insurance value, your real estate, your loans, the holistic. And that's where you find a lot of value. You talk about the family planning and the wealth return, which encompasses everything together.
Yeah. So how do you continue to keep, I guess what would you suggest spouses do with the other to keep them kind of involved when a lot of times the other one is just like, you just handle it. You deal with this, you do that. How do you keep that communication open?
Well, a lot of that comes down to goals based and planning, thinking about where do you want to be in retirement, and totally get the investments, maybe list the amounts you have, but then let's talk about what we want to do with our kids. What are our goals? What legacy do we want to leave? And you get more of an interesting conversation piece. What does the money mean? What does it mean to our family? What do we want our children to embody and think about ahead? And that really helps to pivot the conversation off of such, and it really gets to everybody together of wanting to participate in that conversation overall is what we find. And then you can lead into other topics that maybe need to get a little bit more into the weeds, but you have to get it started before you can even get that going. And that's the approach we tend to use.
Yeah, that makes sense. If you kind of just take it out of just being like a 100% numbers game and more of like, well, let's look at it like we're trying to secure our family's future, our son or daughter's future, or our granddaughter's future. It might be looked at a little bit differently.
And the one thing we do a lot of is proactive gifting to the next generation.
Okay.
And that's a great way to start with small amounts of money to help to educate, whether it's your kids or grandkids, and it helps the whole family feel comfortable that the next generation is prepared to inherit wealth in the future. And it again feeds back into that overall family planning, and that's been a very helpful tool for a lot of our families.
Yeah, let's dive into that a little bit. What are those strategies? What are some of the best strategies to kind of pass wealth? We always talk about generational wealth, but what does that mean? It means being able to pass the wealth that we build up and create in our lifetime down to the next generation, and so on and so forth. A lot of times it's lost between generations. And I think it's by the third generation or so, it's usually lost. So, that's a little bit discouraging when, we're working every day and, doing all these investments and doing all these things to create generational wealth when on average, it's all going to be for naught here in a couple more generations. So how do what are some of those best tools and strategies to help with that estate planning and to preserve that generational wealth?
Yeah, one of the best tools we like to use are trusts, and communication is a big key to that, because everybody hears the word trust and it's like, that's for the only ultra wealthy. It's too complicated. I don't want to integrate that into my family plan. And it's just a really good tool we find to keep money in bloodline, and then to help to educate overall. Because one of the things we find a lot of is there might be money set aside for kids or grandkids for college and other things. And then as the next generation is building up their own wealth, if there isn't communication, you have duplication between what mom and dad might be setting up for their grandchildren and such. And it's just not optimal. So that communication, and then with trust, and trust can be a very good vehicle where if they're structured properly, that you can kind of have money that grows tax-free like a college save plan from the beneficiary's perspective. And you can kind of mimic a lot of the tools or of a college save plan. So we like those as a really, really good tool. And you can start very small, right? You don't have to have millions of dollars to put it into a trust account. It can start with that gifting that we talked about, starts with a little bit and really gets the conversation, education process started.
Yeah. So what amount makes sense? I mean, is there a minimum that you would suggest that says, okay, well, you're starting to accumulate a little bit of wealth. Let's start looking at using a trust as a possible vehicle to transfer that, or is there not, a magic number?
There really isn't a magic number overall. And again, a lot of people hear the word trust and think I'm not wealthy enough for that. And a lot of it is just, even if it's a few $100s or a few $1,000s, that accumulates very quickly. And then when you get to the communication standpoint, families don't like to talk about money, right? It tends to be just a negative conversation. And when you start talking about planning, it's mom and dad or grandma and grandpa. I'm looking to plan for my kids. I just want to make sure that we're all consistent as a family. And that's really a good way to start family conversations as well, is that we're trying to have consistent planning, not wanting to know how much do you have or how much might I inherit, because that tends to be a big concern with families. You don't want to take the fire out of the belly, so to speak, of the next generation. But communication about structure and strategy is a good way to start that as well.
Sure. Now, do you guys facilitate that communication? Like, do you meet with your clients on a regular basis, or do you do it through education, or how do you move that forward?
One of the most popular things we've done over the last number of years are family meetings, which takes a lot of work to get through because you need to be familiar with the wills and trusts and the estate plan, the asset plan, and there's a lot of pre-work with that. But again, it really helps to go through it. And we have 3 or 4 different models we like to use with families, and it depends where you are in that stage of life. Some don't want to share the numbers, and it's totally fine. And others just want to share the structure of what's in place. And it's just a nice way to, again, be simple, but get the family together, talk about what the money means, what's going to happen, what are the structures overall. And family meetings have been a very popular way to communicate. And in this day and age, it used to be difficult to get the whole family in a room together. But now with Zoom and other things, one kid could be on the East Coast and West Coast, but you could still get together on a Zoom call and facilitate a lot of that communication. It's been very effective.
Yeah. That makes a lot of sense. I think that, it's a difficult hurdle to overcome, to start having those meetings and build that transparency and communication, because you're dealing with a couple of issues that people don't like to talk about, right? You don't want to talk about money, or that's how most people have been taught. You're not supposed to talk about money. I always say on this podcast and to everyone, let's make it a transparent thing. Like, we need to talk about money. It's important enough in our lives that we need to talk about it. But that's one thing. And the other part is death. I mean, those are two concepts that we don't like to talk about. So, just starting that conversation is really important.
It's nice to have an outsider, right? It's hard for family to get together. So it's nice to have a third party kind of sitting in the middle. And the nice thing for us too, is we, kids and parents might not want to share how much wealth they have either way. And we could be sitting right there in the middle that know both without having to share, but we end up producing better results with that information because you just get better planning, having shared and know the entire picture.
Yeah, for sure. You mentioned that you have some estate planning attorneys on your team. What other team members and tools do you guys use? People, as far as putting this whole thing together. Obviously there's financial planning component, estate planning attorneys. Do you work with other attorneys, accountants? Who else plays a role in the team?
Well, it's the entire picture. And I think where we see the industry going a lot of ways, everybody's so busy. You want to bring your simplicity to your life, but then feel like you're in control. So one of our goals is to make sure you have all your trusted advisors on the same page, your CPA, your attorney, your family overall, but then go out and live your life. So that's where the simplicity of understanding where everything is. You can check in, know where things are, what changes are ahead, and then go do what you enjoy in life, whether it's business, that you travel, you name it, be with your grandchildren. And it's very effective. So with The one thing I think I was wrong on when I say kind of growing up the old way in the industry, very transaction, I wasn't a big proponent of financial planning. I just figured, you build up your wealth and once you get to a certain level, financial plan isn't necessarily needed. But I've been proved wrong with my team over the last few years. It's a very important tool, especially with inflation and some of the stuff we're seeing these days, to just trust that your plan is going to take you all the way through. And then once you kind of have your magic number of what you know is enough, that really helps facilitate how can I start transferring to the next generation or other planning opportunities overall.
Yeah. What are some of the biggest mistakes, I guess, that people make when they're transferring that wealth? Because again, we already talked about how it tends to be lost by the third generation. I mean, how is it lost? What are those mistakes that people make?
The biggest one is just no communication. I mean, the old kind of way of thinking is you'll find out what I leave you when I leave this earth, as opposed to any time sooner than that. And what tends to happen a lot of times we find is there's either taxes that are incurred between generation, or money is left outright to the next generation that is already fairly wealthy. And then you get that accumulation over the rest of their lifetime, and it enters into another taxable event when they leave this earth. So it's a lot of time it's just poor tax planning and communication between families and not looking long-term enough about that accumulation of wealth over 20, 30, 50 years. And that's really the biggest thing we find is making sure that it stays consistent between generations.
Attorneys, doctors, passive income seekers, I'm talking to you. I remember investing in my first passive real estate deal, the anxiety, the uncertainty of what I didn't know, and what I had never done before. It was a lot of money being wired to someone I barely knew. Now, it all worked out, but that's not always the case. I would have never invested in that same deal today, now that I have the knowledge and the confidence to know how to invest intelligently. And now with a combination of uncertainty and a flood of newbie sponsors in the market, how do you find the true experts that will perform and make your investment successful? For those of you out there looking to learn how to invest passively in syndications, we've been behind the scenes working on something very special. You don't have time to go through a 6-month course or to try to make a program designed for deal sponsors work for you. You want to be a passive investor. Focus on your career and your family, but add cash flowing, appreciating commercial real estate investments to your portfolio so you can practice when you want to and not because you have to. We've built a powerful passive investor program designed to teach you everything you need to know, but nothing that you don't. It's a 4-week program, but if you really want to make moves, it can be completed in just a few days with ongoing support as you make your investment decisions. Passive Income Pro is enrolling now with a very limited number of seats for each cohort, so you can get the hands-on attention that you need. Go to passiveincomepro.io to learn more. Gotcha. And what are some of the investments that you that you're suggesting and recommending to your clients at this point in time? Because there's all kinds of things going on right now, right? With the the increasing interest rates and inflation going through the roof. It's very uncertain times. I mean, it's hard to predict what's happening right now and what's going to happen even in the near future. So what kind of things are you looking at right now?
Well, we've been obsessed with inflation the last couple of years.
Mm-hmm.
And kind of positioned pretty well against protecting that, right? And coming into this year, we really expected the Federal Reserve to be a little bit tighter with their policies, and they are, right? They're telling us we're going to raise interest rates a whole bunch of times this year, and we'll follow through on that to curb the inflation. But the reality is we're actually less concerned about inflation right now than we were the last few years. I mean, there's a lot of signs we think that have peaked. So as you're looking ahead to the next year, we've been thinking about a lot of cash flow investments, whether it's dividend stocks, fixed income. Right now going forward is actually probably interesting. Interest rates are high enough where you can lock in some good yields. It's been a tough market year to date, but from here going to the rest of the year, you could find some compelling returns overall. And then you want hard assets, right? Real assets in an inflationary environment, whether it's real estate, whether it's some version of commodity exposure and such, continues to be a compelling area that we like and think investors should position. Because the reality is, with the stock market doing as well as it has the last 3 years, a lot of our families are underweight real estate, right? Their financial assets have gone up a lot. Real estate the last year has gone up a lot, but not over the last 3 years. So the relative rebalance opportunity to some of the real assets are areas we're focused on.
That's interesting to hear because we tend to bash traditional financial advisors on this show a little bit, and be honest with you. And that's because they tend to steer folks away from hard assets, from real estate, from alternative investments. And that's what this show is a lot about, is exposing everyone to those other types of investments that you can get in outside of 401k, outside of stocks and bonds and mutual funds. So that's interesting to hear that you're encouraging that. How do you help your clients kind of do that? How do you help them diversify across all those different things?
Well, it's a matter of looking at, as I said, starting with that net worth statement and just being honest with the diversification, right? Stocks have done well. It is a good time to look at other areas and stay focused on the long term of a diversified portfolio and just looking at the cycles. I mean, it's been 40 years since we've all been in an inflationary environment like this. So most people didn't have the kind of wealth that they do today during that period of time, and it's totally different. So it's a matter of understanding history and looking ahead to where things are overall. And I think in our business, being a fiduciary, it's an obligation to kind of do what's best and where we see things, and looking holistically at that is what makes sense, because a lot of advisors tend to only focus on the assets they manage overall, as opposed to what matters generationally and such. And that's where a lot of this thought process comes from. And the other thing I would say is, I think so many people in the last 2 years have just changed their mindset since the pandemic. You can't take the money with you when you leave this earth. You need to enjoy it a little bit more. And having that second home or other places are a balance. And the work from anywhere trend is not going away. And, those kinds of trends. I think it's a balance between enjoying your money a little bit more and just being mindful of what inflation means in the years ahead.
Yeah. You had mentioned something about being a fiduciary. Could you kind of explain the difference between, you being a fiduciary advisor compared to some of the other traditional financial advisors that exist out there?
Like I said, with kind of growing up in the old ways, very transaction basis. I want to sell you something that I think is going to go up tomorrow, and I get a transaction charge or a commission for that, right? And it's very kind of one-off. Whereas when you think about the fiduciary side, it's really the obligation to do what's in your best interest. So it's not looking to make a quick commission on recommending this and moving on to the next one. It's really understanding what your family needs are and where you're going, and put it all together for the next generation, or the next 10 and 20 and 50 years ahead, and not looking to make, like I said, a quick buck on some quick idea.
Yeah. And I think since you take that family approach and that generational approach, it's long-term, obviously. So the alignment of interests is a little bit more there compared to that more transactional financial advisor who's really just trying to get that commission on the sale for the lines of business that he can make the most money on. Whereas your firm is taking that long-term generational family approach.
Yeah, and we tend to become part of the family in a lot of ways. And our approach to management of wealth too is our money is managed the same way. So everything we're buying and selling or investing in, personal portfolio is done the same way. And it really adds that extra layer of fiduciary type of status with what we do. Because again, we treat our family's money as if it's our own, because we own the same things.
Yeah. Yeah. And building on that, I mean, what are your general thoughts about traditional investments versus what I call alternative investments, like real estate syndications, private equity space? What are your thoughts on that? It seems like you take a pretty objective approach.
100%. I mean, it's a matter of, because I think in an inflationary environment, you really want to be focused on cash flow, right? And getting cash flow sooner. And that's one of the things the last 10 years, tech or growth type investments have done very, very well as kind of valuations have exploded the upside. But in environments like this, it's an opportunity to say, look, that's done well. Let me take some profit and focus on other areas and understanding overall diversification and alternatives in real estate. And crypto is another area of opportunity long term. Once kind of the industry addresses that a little more mainstream, but these are going to be avenues that are not going away and are helpful generationally.
Yeah, I love that. I love that you're looking at all sorts of different investments rather than just kind of focusing on the traditional ones, that you can kind of see the bigger picture, even something like crypto, I don't know if I've ever heard a financial advisor even, have to say those words coming out of their mouth, because it's just not something that honestly that they could benefit from a lot of times.
Well, in our industry, I'm a little bit disappointed from the standpoint we're playing catch up in a lot of ways. And I looked at it for my team, and overall, it's our obligation to be educated. So we've really spent the last year and a half or so of really understanding deep dive from the crypto side. And we've had families that have made substantial money in crypto. And the first thing we worried about is the titling and probate and other stuff that wasn't accounted for. So we really needed to understand, how do you retitle the crypto to make sure it's accounted for in your estate plan and such. And as we did that, it was just necessary to figure out how it's working. And the reality is it's just not going away. It's going to be a while until the industry kind of catches up and it allows for it. But we didn't want to be falling behind that when it is allowed, that then we're trying to understand what's going around. So it's just a matter of being proactive.
Yeah. Yeah. Do you come across a lot of clients that are coming to you and, maybe they have a certain situation where they're trying to step away from their job or something like that? Do you help them kind of put a plan together because you had mentioned you're bullish on things that are strong, that have strong cash flow, which someone trying to maybe step away from their job might have that same interest. Do you have clients that kind of come to you and say, hey, like, this is what I have, this is what I'm doing now and how much I make. Can you help me put a plan together to, maybe start walking away from my job, little by little, billing less hours. We have a lot of attorneys that listen to this show, billing less hours and eventually maybe retiring a little bit early.
Well, it's the biggest thing we learned from the financial crisis. So, prior to the financial crisis, you'd run your Monte Carlo simulations of, 10,000 different, and you'd make 10% return per year on stocks, and you'd map out your retirement. You're totally fine. Right. But what you didn't forecast was a 50% drop during the financial crisis. And that really hurt a lot of people in retirement, and it changed our business model forever. So where we pivoted to for planning for retirement and such is really be cash flow based. I need 20,000 a month in retirement. Well, let's make sure there's cash flow coming in, dividends, interest, or other investments that generate that predictable cash flow that you need. And it really gets the portfolio working for you. It's like the job you've had your whole career. Now you can see the cash flow. And what that does is in the ups and downs of the markets, that cash flow is very static and it's very certain over time. And once you lock down that cash flow, then you can build on the multiple generations of risk and other things and all the other planning that goes with it. But cash flow is a very strong method we like to use in planning for retirement or in retirement.
Yeah. I mean, that's kind of that first hurdle you've got to get to is to replace that active income with some sort of a passive income vehicle. Depending on what you're doing, you might not replace it entirely or to get started, but little by little, you've got to kind of get there to at least cover your expenses. And that's kind of that financial freedom number, whether that you want to call that retirement or what have you.
Yeah. And it really comes down to sleeping in retirement. The last thing you want is, the market volatility, and you're worried that you might have to go back to work, and having that cash flow certainty and watching that really puts you at ease in retirement.
Yeah, for sure. I think that's one of the things that people fear the most, that they've saved their whole lives. They've made these investments. They go ahead and retire, and then something happens to the market like it did in 2008, and you lose, half of what you had before. And then you end up going to Walmart and being a greeter or something like that.
Yeah, it's the concern with everything that's going on in the world these days. You want that certainty, and again, in the environment that we're probably going to be in an inflationary period for a number of years ahead, it's a model that works tried and true.
Yeah, for sure, man. All right, before we jump into the Freedom Fort, you got one last golden nugget for our listeners?
Well, I think one of the big things that I'm concerned about personally is really, taking more time for yourself, right? You work. And I think the pandemic has been good to, be a little more balanced and take more time. And I'm a big proponent of being healthier. It fits together, taking more time off, the more productive you are. So I think it's important for everyone to really be mindful of your health and your time off, and you end up being more productive overall and tend to be more successful, I found.
Yeah, I agree. I think the pandemic had certain things, certain good things that came out of it, and that was one of the things was people realized that you can have a life outside of going to the office 10 hours a day. There's life and there's a life to live out there outside of the office.
Yeah, and I found it kind of that less is more, right? Or work smarter, not harder, and you end up with better results.
Absolutely. All right, man. Let's jump into the Freedom Four.
It's time for the Freedom Four.
What's the best thing you do to keep your mind and body healthy?
I'm very regimented. So it's 4:30. I'm at the gym every day. You have a stressful day, you burn it off. By the time you get through that, ready to go and refresh. And it really helps me. And I've been doing that for about 7 years now.
Awesome, man. I thought you meant 4:30 in the morning for a second. I was like, that's pretty early, man.
My mind is good in the morning. My body's good in the afternoon.
Yeah, love it. With all your success, what is one limiting belief that you've crushed along the way, and how did you get past it?
I think, I have 4 children. So I think it's that you can be a father and work and be present. I think a lot of people feel you have to be successful in your business. And you kind of have to set your children to the side. And it's really setting that time apart and being present with your children and having that balance. And I think scheduling has done that for me, where you know where you are, you go to the gym and you can be present for your kids. You can be at the events, you can take them there. And I think being successful in a business and being a successful parent is doable.
Yeah, I agree. You've got to put that phone down. I mean, you've got to be present when you're with your family. That's family time. Put the phone down, leave it in the office, and then jump back on it 100% when you get back in there. All right. What's one actionable step our listeners can do right now to start creating more freedom?
I think number one is put that net worth statement together. Figure out where everything is, list it on one page. It's simple, it's organized. And then take that page and sit down with your spouse, talk about it, get some goals going. And it's a very easy way to get started. It's not complicated, and it helps to facilitate that family conversation.
Yeah, I agree again, man. It's amazing what that will do when you know the stats, what they are and where you stand. It gives you actually some motivation to keep it going. It almost gamifies it.
Well, the anxiety level goes down. You're like, I know I have this and this and this here, and you see it on one page and a bottom line total. Like, wow, right? It's amazing what it does for peace of mind.
Yeah, I mean, some people, like I said, don't even track like their income and expenses, and they're like, "Where does this money go? Like, I'm making $200,000 a year, and I have nothing in savings. What is going on here?" And then when you start breaking it down and look at, start tracking your expenses, like, oh goodness, I need to cut this out or cut down on this, and then you can actually start saving and investing and planning for your future. Last but not least, how has passive income made your life better?
Let's just balance things out, right? And I think seeing the cash flow overall just helps to bring down your anxiety, if you have that, or stress level. And it helps to stay diversified, right? There's ups and downs in every business, every cycle of the market, and industries are different. And having sort of passive income to balance things off does help to provide for either your vacation trip fund or whatever it might be, to just enjoy your life a little bit more and not kind of work all the time.
For sure. All right, brother. It's been awesome having you on the show. Where can our listeners find out more about you?
Well, either our website, Hightower Lerner Group, or LinkedIn, Instagram, you name it, a lot of the social media platforms.
Yeah, everyone get out there, follow JR, get on his platforms, and it puts out a lot of great educational content. So jump on there, follow him. JR, again, it's been awesome having you on the show. Talk soon.
Thank you.
Ladies and gentlemen, JR Gondeck, incredible guest. JR, thanks again for coming on the show. And I hope you listeners out there can take something valuable home with you. And for me, it's, tips and tricks about how you can bring up those tough conversations, or at least I wouldn't say tough, but the conversations that we don't normally have with our family, with our significant other, and with our kids about money, because money is extremely important. And if you think that it's not, then you're just lying to yourself. And it should be something you can talk about openly, honestly, and in a transparent manner. So hopefully you can take that home with you and start having those conversations and relieve some of that stress of not being able to talk about it, right? So until next time, enjoy the journey.
Thank you for listening to the Passive Income Attorney Podcast with Seth Bradley. Do you want more ideas on how to generate multiple streams of passive income? Then jump over to passiveincomeattorney.com for show notes and resources. Then apply for the private Facebook community by searching for the Passive Income Attorney on Facebook. And we'll see you on the next episode.